All right, what's up, team? This is Ruben from TGE, and let's talk about why long-term investors should learn options. Okay, there are so many benefits to options, and I actually talked to a lot of investors, and a lot of actually the TGE Max members. They're actually investors. They're you guys. I have them. I have them here on my site. They're all investors. Uh, she was an investor. He was an investor. He was an investor. He's an investor. They're all investors. And a lot of them didn't know how to trade options or just wasn't a thing, right? And I always told them like you gotta learn options. They reach out, of course, because of interest, but like you gotta learn options because the options have a huge impact in the equity market, you know? And so you gotta learn it. And this article talks about it, why every long-term investor should learn options, even if you never trade them. So you don't have to trade them. We like to trade them. We like to leap options, and we like to invest and buy long-term and all that stuff. But even if you don't trade options or you're not investing in long-term options, you should still learn them. Okay, they play a big impact, and it'll teach you how to like protect your capital, your long-term assets. All right, let's get into it. So let me tell you something most investors never hear. If and actually, let's make this bigger because I'm kind of blind. All right, if you if you got serious capital in the market, like six figures or more, you cannot afford to not understand options. You have to learn it. Okay, all TG Max members have six figures or more. They have to learn it, and I emphasize that because it's going to protect you in the long run. There's so many strategies out there to make money with options and also how to protect your long-term assets. There's just so many. It's so much more capital efficient. It's much more strategic, and there's actually defined risk. It's not like you're just like you're not just like how much does it cost to buy Apple or Tesla? How much is a Tesla? $286 per share. You could buy an option that acts like 100 shares of Tesla for $1,000 bucks. If you try to do 100 shares of 286, you're going to pay a lot. What is that, like $28,000 or so? I mean, it's pricey, you know. So it's a lot more capital efficient. I'll tell you that. All right. So, but if you're managing real money, right? If you're an active investor and you're picking your own stocks, and you don't know how the option market works, then you're flying blind. Okay. So you got to think of it like insurance. Imagine you buy a house, right? Let's say your house is worth $500,000. Are you, well, they wouldn't. You wouldn't leave it completely uninsured. It's not even possible. Actually, before you even get a mortgage, you have to get home insurance. You have to make sure that you have home insurance. Okay, so hoping you let's say you leave it completely uninsured, hoping nothing bad ever happens. You wouldn't do that, right? It's not possible, and you wouldn't do that. You're going to protect your asset. You want to know what could go wrong and how to protect your asset, right? Especially if a storm is coming, natural disasters or something. Now, think of your portfolio the same way. The stock market has its own version of storms, earning reports, Fed decisions, macro shocks, tariffs, the president, whatever that case is. There's always something out there. And the option market is where those risks show up first. Okay. So a lot of the stuff that we do inside TGE Max and that I teach inside the community as well too, the free one, is that you got to learn the option premium. You got to know how to read them. They're numbers, and when you have numbers, you can make forward-looking predictions, and then know what is potential future upside risk or opportunity, and then also downside risk. Right? The market is very random, price is very random, but you need to be able to have some sort of gauge to say, as of right now in the current market, it can go here and it can go here, right? Like, and then you adjust, okay? You prepare yourself for that. So when institutions expect turbulence, it shows up in the option prices, dealers positioning, and volatility shift, like implied volatility. So this is stuff that you'll learn in the option world. If you know how to read those signals, you can act early And if you don't, you're the last one to know, okay? And the first one to take the hit. And that's so true. A lot of the members here, during the April, let me show you guys April. Let me pull up the chart here. During April, oh wow, Tesla's flying now. Okay, during April, let's pull up SPY, or let's pull up SPES. Let's just pull up ES for now. Okay, during April, we had this massive downfall, right? April 1st. And around this time, I was telling my members, hey, get some puts because what's coming up looks really bad. Now, it's not 100% sure, but it turned out that the prediction of it falling, of the S&P 500 falling, was true. Okay, and it fell violently. And I'd let everybody know, hey, you need to buy some insurance. And most of the members did, I believe. And those hedges, some of them, they said, those hedges are saving my bacon. By the way, Ruben, I have one of my long-term stuff that's a 300%. I have one of my long-term stuff that's a 300%, not selling it out. I'd rather lose some of the margin. Okay, so what he's saying here is that one of his hedges, he had a 300% return on his hedges while it was protecting one of his long-term assets. Okay, so and that's all because not because I knew where price was going or like I predicted or anything like that. It's just because we're just reading the option premium. We're reading the data and we're letting us guide us like where it wants to go. And so at the time, even we have long-term assets as well too, equities or whatever. We need to be able to protect that. You need to learn how to be able to protect that. And I was letting them know, like, hey, if you have shares, buy some protective puts. Try to do a delta neutral, like a poor man's delta neutral, this or that, right? So, anyways. Okay, so what can you actually learn from the options? So you can learn, most people think options are just for trading. Calls, puts, leverage, whatever, right? But they're like you're missing the bigger picture. It's much more than just that, right? The option market tells you where smart money is preparing for. Okay, it reveals where big players are positioned, where price is likely to stall, and where volatility might explode. Even if you never place an option trade, at least you know how to read these signals, and it gives you an unfair advantage. Okay, so I'm going to show you an example here. Here is Tesla. Like this is what Gextron looks like. This is the tool that we use. We let Gextron kind of do all the heavy lifting for us and tell us where's the biggest resistance zones, where's the support zones, tell us when things are going to get stable, okay, or volatile. And tell us also how institutional money is positioning themselves. Okay, some people are spending almost over $1 million in the money for $5 calls. So, that has its own meaning and stuff. I'm not going to get into the technicals. But having this kind of information, knowing how to understand the premiums of an option, and also being able to know where the expected move by a specific expiration date is going to give you huge leverage. Especially if you're a long-term investor, you need to know the quarterly or earning expected move, right? That way, like, hey, we are at the top. I might want to hedge. Hey, we're at the bottom. It might be a good time to buy, right? These are all things that you have to know as a long-term investor, or at least you should know. It's not as simple as like just buy the dip or every 2% point it's down or whatever. Like you dry up your capital that way. That's what happened to me, okay? You don't want to do that. And I had over a 6-figure portfolio. So you don't want to do that. You want to like know when to buy, okay? So even if you have an unfair advantage, that's how you have an unfair advantage, okay? By reading the option premiums and using tools that are forward looking and not backward looking, like the Bollinger Bands or like the moving averages or whatever. That doesn't work. It's whatever. All right, so Gextron translates this for you. If you ever felt like you're guessing when to enter a position or worried about buying the dip too early, it's not your fault. Most platforms don't show you what really matters. And Gextron is built for long-term investors who want to manage risk like pros. And so here's how it helps. And just like I said, like there's DIY versions. I think I made a video on how to do the expected move. Okay, so option price tells us how far a stock price, how far a stock is expected to move by a certain date, whether it's this week, this quarter, or next earnings. If price is already near the top or bottom of that expected range, it's a warning that things might slow down or reverse. Okay, so this is like knowing where like the storm forecast before deciding to step outside. You don't have to guess; you have a plan, right? And so I'll give you another example here of Celsius. Okay, Celsius was a good example here. CLH. I'm gonna pull up the charts again. Okay, so Celsius has been. Why do I have this? Let me remove this line. Okay, earlier in the quarter, before around this quarter right here of February until recently, they had a quarterly expected top around $34 or something like that. I just updated it, right? So I'm a long-term shareholder of Celsius. I love the drink, whether it goes down or up. I love the drink, and so I'm gonna buy it. And so but I need to have a plan to protect my long-term asset, right? And so when it got to the top, I started buying protective puts just in case. Okay, it's again like home insurance. The objective here is not to be right or wrong, it's just to have an insurance just in case. Okay, now during the downfall of like April 1st and all that stuff, it actually held pretty well. So my protective puts kind of, I ended up cutting them. Now, since they released earnings, I have recalculated the quarterly earning move, right? And so that means from here until next earning date, Gactron has told me that the expected top is going to be 42.65, which is this QEM line right here at the top right. And QEM all the way the bottom expected move is 28.03. Okay, as a long-term investor of Celsius, if price goes up to the top first, I'm going to buy some protective puts or some sort of delta neutral to neutralize any mitigation loss on my asset. Okay, and if it goes all the way to the bottom, I will start buying more. It's just that simple. It's not very complicated. We just let Gactron do all the work. Now, there's a DIY version if you want to see that. There is maybe like 2 videos ago. You can go check that out, where you can see how to do the DIY version. Gactron takes into consideration like implied like volatility, time, decay, all this other stuff. So it's a little bit more tweaked. But that's how essentially expected move works, even for a long-term investor. For trading, it's a little bit different. You're going to look at the weekly expected move. For example, like if I pull this up and I pull this, I'll look for like the week or 2 weeks or a month or so and see what the expected move is so I can trade within the range. Okay, so that's for options, but that's how you would do it for long-term investing as well too. Okay, gamma exposure. This is where you can see where price is not being pushed, but like where are the support and resistance. Okay, and so again, this is something that Gactron takes from the market and it updates as the day goes by. So this one is huge. Gamma exposure shows you how option dealers are positioned, right? It's not about institutions at this point. It's where are the market makers? There's 3 big players in the market. There's institutions, there is hedge funds, and there are market makers, okay? And of course, hedge funds and institutions are participants. Market makers are the ones providing liquidity, but because of that, they have to hedge their own books. Market makers don't care about being directionally biased. They just need to provide the liquidity, whatever option contract, and then hedge. And they do that by buying and selling the equity. That's the key, okay? And so depending on how much delta they're exposed to, they're going to either buy or sell the equity, the underlying price, right? It could be Apple stock, it could be Tesla stock, it could be SPY. And so you want to know, like, okay, like where are the big areas where they're going to unwind their hedges and how are they going to push price by a certain strike level, right? And so if we take a look at Tesla, right now, the biggest, tallest, like Gactron is again really easy because it just shows you like the tallest bars. You're just like, where's the tallest bars? Okay, 300, 290. As price is going to 277 and higher, Tesla can see 290, and if it gets past 290, it might get rejected here. It's possible, because it's a resistance zone if price is going towards it. But if it goes past it, it can potentially see 300. We call that max reward. Max pain is 200 at the moment. We're kind of far away from that. We're far from the negative side, from the negative bars, so that doesn't really matter. But this way you can see like, okay, where's the tall bars? You're looking for the tall bars. That is local support and resistance as of right now. Let's see where Tesla is at. Okay, Tesla. Okay, you can see this. Okay, this is a wonderful. Oh no, that's Celsius. Let's look for Tesla here. Okay, Tesla did get close to 290 today. So you can see here how we use Gextron, how we use gamma exposure to help us like where are dealers going to have some sort of make a reaction for this ticker for Tesla, right? Near 290, it got rejected and now it's struggling. Can it get higher? Of course it can. It can go to 300. If it gets above 290, it can always go to 300. It's like it stalls, finally breaks out, makes the support, and then goes to 300. Awesome. But if you want to try and protect your asset right now, 290 might be a good area to short. Take it to P trends or something, some sort of other level, some other key level like Gextron is going to provide to you, right? And then you'll see my line here that this is for the week, the 296. So I'm kind of expecting Tesla to get to 296 by the end of the week. It may not, but there's a 70% hit rate of it getting there, right? And if it gets here, then maybe I want to protect my capital for the week for my long-term asset. Maybe I'll get some protected puts. Okay. Super simple. Okay, but this is why you need to learn how to trade options. You need to understand what delta is. You need to understand what gamma is. Everything that relies is about options, because that is going to play a big factor with how market makers buy and sell the security. Okay, and that could affect you. Okay, so Gextron shows you where the flip happens, so you can see the pressure zones before price reacts, right? Just like I showed you. That's like knowing when the wind is about to change direction, so you're not caught leaning the wrong way. All right. So a real example, protecting your capital smartly. Let's say you're holding a big position in Apple, right? And you check Gextron and you see, okay, the stock is approaching its expected move for the quarter. Gamma flip is from short to long near the current levels. Option volume is spiking at the specific strike level. Institutions are clearly active. Now you know that this is not the time to size up blindly. You wait, scale in, smarter, or hedge. Okay. You're not just buying and hoping anymore, you're managing risk with real visibility. So the bottom line is, if you got real money in the market, I say more than like 6 figures, and you're actively investing, you need more than stock charts and news headlines. Okay? The market doesn't move off of news. The market uses the news, they use news to move through it. Okay, that's really important to know. You need to know where volatility is likely to hit, which you can only find in the option market, where the institutions are betting big, which you can find in the option flow market, in the option flow screener, where dealers are creating pressure, which you can find in Gextron, and when it's time to step back or step in. Okay, that's what options teach you, and what Gextron makes simple. This isn't about trading more; it's about investing smarter. Your portfolio deserves protection, just like your house does. And if you don't know how to read the signals, nobody's going to warn you before the storm hits. Like seriously, if you were caught up in this storm, let's say like you're an Apple investor and I know a lot of people that bought Apple like here at 240. 240 was the expected move 2 quarters ago. And now they went all the way down sub 200. That's a long time to wait, right? If you knew the expected top was here at 240, or where's 240? Around this area, you could have probably bought some protective puts, some stock insurance. So you can at least capitalize as it's coming down and then re-add to your long-term investment. So again, these are things that you can only pick up in the option market, not on a stock chart, not in the equity market. They're both important. Okay, so learn the language of the options, use tools like Gextron, and invest like the people who move the market, which are like market makers and institutions. Your future self will thank you. And that's it. Okay, That is why every long-term investor should learn options. And that's what I teach everyone in TG Max. And because of that, they're able to protect their assets and get 300% returns. And some of them now learn to trade options for short-term income. So if you're interested in that, or you're interested in Gextron, I'll put a couple links in the description box. Check them out. There's free trials. And if you have any questions, put them in the comments. I'll answer them. All right, peace out.